Well, welcome back. This is episode 3 of Coffee with the CEOs. Myself, Michael Coaches, and Jerry Hemmer. I think it would be a good idea to get started with a little bit of an update on some of the work that's being done in Washington, since we talked about it last time, and there has been some movement forward. So, Jerry, what's going on?
Yeah, I mean, there was a lot of movement. Updates when I had just gotten back from the Hill, they hadn't voted yet on the bill. It narrowly squeaked by. I think it was a 1-vote majority. So very, very tight passage, but a lot of good things. If you're kind of following the bill and the progression and what's being put into there from a sort of growth and less legislative oversight and regulatory cuts. There's a lot of things in there that were good. It's kind of like as President Trump would say, the one big beautiful bill. So it squeaked through the House. Some things that affect us. I know the last time we were talking about the 199A business deduction. When we were up there on the Hill, we were talking about just kind of keeping it at that 20% deduction. And actually, the House bill had increased it to 23% deduction, which was very significant. From an estate tax perspective, we got the legislative body to agree to have some type of permanency in it, which is what we were advocating for. A lot of the changes at the end of this year it was going to revert back to a much lower number, somewhere around the $6 million per individual, with indexing for inflation. They set it at $15 million per individual. So, married, portable, it can be up to $30 million with an inflationary impact. They did a lot of things that we were asking for. There's a lot of regulation cuts in this bill. The big thing and what people are talking about from a perspective of, is it adding to the debt, adding to deficits, all those different things. Like they push the debt ceiling out way, which, the debt ceiling seems to just be a bargaining chip on both sides of the aisle. It always seems to be, at least.
It seems to be a problem for the other organization, the other party that's not in power. It's a problem. If you were in power, it's not a problem.
Yeah, we have to increase the debt ceiling no matter who we are. So is it really a ceiling? Is it more just like a guideline?
Yeah.
Who knows? So they're able to try to push that out for a year. The big thing in where it comes out as far as the deficits increasing and all that other stuff, what's sort of unique about it, and this is kind of getting a little into the weeds, is that the Congressional Budget Office, which is like this nonpartisan group that sort of scores these bills from an impact on like the economy and growth and debt and all that other stuff, is showing basically like 1.8% growth. And that's the assumption that they're building into this to determine whether or not there's deficits and deficit spending and all that other stuff. And at a 1.8-ish% growth rate, yeah, it's just showing like deficits increasing and et cetera. So a lot of the fiscal hawks, if you will, are saying that that's just not good. Like we can't be adding to the debt. If you actually use like something called dynamic scoring, which is based on a belief that significant cuts in regulation, significant cuts in taxation, and all that will then lead to growth. And you put like a 3% growth in GDP number into those formulas, there's like an extra $4 trillion that's raised. And so that's sort of where the debate's happening right now. There's some fiscal conservatives on the Senate side where the bill is sort of sitting now that are saying, like, well, debt's in deficit. And then there's the other faction of the conservatives who are saying, but the CBO is putting in a very low growth rate. So that's going to be hashed out. There's a lot of talk right now with some senators saying, hey, let's try to do this into 2 bills or 3 bills or 4 bills, or, and the president's not going to go for that. He's already made that very, very clear. He wants one big, beautiful bill, which is like all encompassing of every single campaign promise he made, with a no tax on tips, increases the standard deduction, like all these different things. So I don't see it going and being broken apart into 2 or 3 or 4 bills. That would in all likelihood be dead on arrival at the House level. So just like we talked about last time, House members screaming about this or that, using it as bargaining chips. The one big thing we talked about was the SALT deduction, and the bill on the House side increases SALT deduction to $40,000. So that was sort of to appease some of
So when you say SALT, I mean, I don't know if everybody knows what SALT is. I want to explain that real quick.
Well, again, it's a state and local tax deduction that if you're in a highly taxed state,
New York, New Jersey,
Connecticut,
Yeah.
but those states also have some Republican members of the House in them in different voting districts that are conservative in those states. And that's something that they've been promising their constituents that they were going to make sure got back into this bill. So there was debate and bargaining around what that number would be. Would it be brought back in where you could deduct your state and local taxes? And so sort of the number that they came out in agreement upon was $40,000 of a deduction of the amount that you paid in state and local taxes. So if I paid the state of New York, keep it simple, $40,000 of state and local taxes, then I could deduct that off of my federal return.
That way you're not being taxed twice on that same dollar, federally as well as locally.
Yeah, it's really more just if your state has state income taxes, then your state is charging you those state income taxes.
Right.
Now, this is like, my humble opinion, that just because your state has state taxation doesn't mean you should be able to deduct that expense off of your federal taxes. But, some people differ. And if you're in a highly taxed state in a conservative district, then you're going to want to try to get that for your constituents. So no shock there, the $40,000 number. But the bill also had $1.5 trillion, I believe, in spending cuts. So now it moves over to the Senate, and the Senate's got, I think they can lose 3 votes in the Senate before the vice president will have to come in and cast a tie-breaking vote. And the Senate goes through their own deliberative process. And the president and even the House want this on his desk by, July 4th weekend. Will it get there? It can. I think, there's a lot of posturing and people are trying to, dig their heels in to get what they want. But at the end of the day, I don't think that this is going to be held up. I think that the Republican members of the Senate, you'll probably have it if some things can't get done where they can lose the 3 votes and they lose those 3 votes. But then, JD Vance comes in and casts a tie-breaking vote, and we know which way that's going to go, obviously.
Right. Is it in part because some of them are going to they're going to run for re-election next year, so they want to be able to be out front saying they're trying to do something for their constituents?
Well, the ones that are going to oppose the bill, I think Senator Rand Paul has been pretty vocal about his opposition to it in the manner in which it's structured now, because he doesn't like the debt ceiling increase, and he doesn't like the deficit spending that's being projected. And again, if you buy into that dynamic scoring concept, I think that this bill personally is jam-packed with lots of growth type, policies. And so I wouldn't, if I go on the record right now, I think if this thing passes, you're going to be looking at 3.5, some people are even saying 4% growth on the GDP, which would just be a massive amount of money being scored into that bill that currently is not being accounted for. So I think that's where some of the debate is. And again, they can lose 3. They can lose 3 votes, and then Senator Vance would come in and be the tiebreaker vote. So that's sort of where it is right now. The Senate is a much more deliberative body, and they're going to go through their process. But at the end of the day, I don't see this not getting passed after Mike Johnson, who's been working with Senator Thune, sort of hand in glove on this, got it passed in the House, and he did his job. Where most people thought it was going to be a possibility to get all those people online, he did. And, it was a very, very tight margin. So I don't think you're going to see a ton of changes going back to the House to then have that reconciliation process.
How long does that reconciliation process take?
It can go quick. So the House had their bill. The Senate's going to have their version of it. If there's going to be any major changes, if there are significant changes, then they have to kind of reconcile the 2 bills together.
It's just like a small committee of guys that get together and figure it out.
Yeah, you got some backroom conversations happening, but then it's like, okay, now we just go get it passed.
Yeah.
I don't think it's going to be shut down because of that process.
It'd be nice to move forward with the tax bill so we all know where we're going.
Yeah, well, and that's so much of what's happening right now from the economic perspective is they're waiting for some type of certainty. I think the markets have built in a flat 10% tariff across the board. I think they see that Trump throws these things out there, the markets react. It's a negotiating tactic, and then it kind of gets pulled back into reality. And the markets have recovered almost everything that they lost from the initial fear of these things. And the inflation numbers have been fantastic. They're coming down. Everybody thought they'd be going up. The GDP number came out, and that was a negative 0.3 originally. They revised it to negative 0.2. But a massive amount of that had to do with the fact that the import numbers were massively higher as people were sort of front running what would be potential tariffs. And that had a negative impact on the GDP because of that imbalance. So I don't think you're going to see that imbalance in Q2, and Q1 might be revised up again when it has its final number. But once they get some certainty around all this, by that July 9th date from a tariff perspective, and hopefully this bill will be passed by then, I think it's like, maybe I'm always eternally optimistic, which is fine. But I think that the economy is just going to flourish once that all is done and there's certainty around it all.
That's exciting. I'm excited about where we're going.
Yeah.
But business-wise, that's great.
Yeah. If you'd like to learn more about our wealth management philosophy and style, please check out our website, www.afgfl.com, and click Talk to a Financial Professional. So I guess the second thing that's happening right now, like above all that stuff on the political side, is we got a fantastic group of summer interns coming in. So why don't you talk a little bit about the recruiting and the growth of the firm, the internship program, what that means for some of these young individuals coming out of college and into their senior year of college as well.
Yeah, it's great. We've got 8 interns that just started yesterday, and there's 2 other additional individuals that came in with the intern class to learn what we're teaching. They are career changers, and we're excited about what they're going to do. We've got a program that will run them through the end of July. And they're going to be there at least 3 days a week. They will also be doing some also studying on their own, but it'll be some real life learning the business, seeing, hey, if this is something I can really do, and is if there's something I'm really interested in, because they're going to learn our process. It's all about process. It's not about product. Certainly product will be part of it, but they're going to learn process first, how money gets handled, how cash flow works, what you need to do from a protection standpoint. Then we'll talk about assets. Then we'll talk about liabilities. We'll work them through the whole system, and they'll see all the tools that we have. And then they'll also see all the home office support that's provided by all the different organizations that we have. Certainly we have Guardian, because Guardian's our parent company, but you also have Park Avenue Securities. And Park Avenue Securities being an independent broker-dealer, we have the ability to sell just about everything in the market. So we'll be able to talk to them about all the different products, whether it's a BlackRock, a Fidelity, American funds, whatever it might be. And American funds has ETFs. And then structured notes are a big part of what we'll do. So we're teaching them product as we go towards the end of the summer.
I think that's one of the coolest things about our, sort of the structure in which our business is run, is we have all that support from a parent company that's been around for 160 years that provide us with all those resources, and yet we have a significant amount of independence in the manner in which we run the organization, how we train our new advisors and things like that. So talk about how critical that is as far as the independent side of it when you're going out to the marketplace with clients and solutions that we provide.
Well, certainly when you're talking to a business owner or you're talking to somebody that works for someone else, you want to be able to go in there from the perspective of, hey, we're Alliance Financial Group, and we will talk with you about what your needs and wants are, and more importantly, what your goals are. So to have the ability to go to the market once we figure out what products are going to satisfy those goals, we can talk to anybody. Guardian, the contract with them is a non-captive career contract, and that just means you're a statutory employee. So from a statistical standpoint, you can sell anybody's product on the street that you need to sell. As long as it's a good product, we can sell it. So to be able to answer all that client's questions, concerns, and be able to take care of them is important, in that you can use any products or services that are available in the marketplace, so you can do everything for them.
So yesterday morning, we had them all in. They all looked excited. We did a whole hour or so on our philosophy and why we're different. Take a second just to kind of talk about, how you take that excitement of a brand new first day within an internship program. And some of them we're actually hoping will join us full time after this program sort of ends in July. But how you take that excitement and turn it into like building a business.
For the next step for them, it's going to be looking at it from an individual perspective of, who do you know? What individuals that you can talk to about an exciting business that you're in. Everybody needs what we do. And their first reaction a lot of times is just to be defensive. But to be able to say, hey, let us talk with you for an hour about the work that we do. And I think the excitement for them continues to broaden as they actually do some joint work. And the joint work is just maybe a Zoom, maybe an individual conversation with someone, of showing people, hey, there's a process to how money works. because most people, whatever they have built is a culmination of products over the years, not a process. So I know that when they sit down with an individual and walk them through a process with us, that excitement builds because they get to really see something other than what they were taught at school. Not that anything was wrong with what they got taught at school, but now it's real life. Mm-hmm. Now it's actually seeing what it can do and the changes that it can make for people.
What would you tell them to steer away from?
I would steer away from being product driven. I would steer away from saying, hey, do you want to buy life insurance? Hey, do you want to buy stocks? Hey, do you want to buy structured notes? I think all too often people are chasing a rate of return, or they're chasing the next hot topic. You don't want to do that. You want to really sit back and say, okay, let's look at goals. Let's look at all the things that you want to accomplish in life, because money's not math and math isn't money. It's all about, hey, where do you want to go? Then let's build that process rather than say, oh, I really like this product. It's really cool, because I believe that's what just about everybody else in the industry does. They're chasing product.
So perfect. I think I'm excited about what this summer has to hold. I'm excited about all the energy and youth and exuberance that's in the office right now. So I thank you for the time, obviously, today. Look forward to having more of these into the future, and any topics that people want to discuss, reach out and let us know. We're happy to talk about them.
For sure. This is great. I really enjoy this, and I'm excited about where the organization's going, and I'm excited about all the referrals and introductions we're getting to not only clients, but the new advisors that want to really take a look at this business.
If you enjoyed our conversation today, please like and follow us on all the different social media platforms. If there's any topics that you would like us to discuss, please leave them in the comments below. And as always, we're looking to grow our firm. If you know any individuals who you think would be a phenomenal addition to the Alliance Financial Group family, please reach out to us. We'd love to have a conversation with them.
This podcast is intended for general public use and is for informational purposes only. By providing this content, Park Avenue Securities LLC and our financial representatives are not undertaking to provide investment advice or make a recommendation for a specific individual or situation, or to otherwise act in fiduciary capacity. This information should be relied upon only when coordinated with individual professional advice. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. Data and trends used were indicative of the date recorded. Opinions, estimates, forecasts are based on current conditions and are subject to change without notice. Jeremy Hemmer and Michael Coaches are registered principals and financial advisors of Park Avenue Securities LLC, PAS. Securities products and advisory services offered through PAS, member FINRA, SIPC. General agents of the Guardian Life Insurance Company of America. Guardian, New York, NY. PAS is a wholly owned subsidiary of Guardian. Alliance Financial Group is not an affiliate or subsidiary of PAS or Guardian. Michael C.A. Insurance License 0I00307 8039907.1, expiration 6/27.